Okay, all right, so let's take a look at our guided examples. Okay, well, there we go. All right, so exercise 2-1. Now again, remember our guided examples in Connect are algorithmic. So let's focus on the one that's in the workbook. Let's figure out how to program it. And then what you can very easily do is when you get home, you can plug in your information from your example with the different numbers and see if you can get to the right question, get to the right answer. Okay? All right, so let's take a look at exercise 2-1. All right, so we've got Harris Fabrics computes its plant-wide predetermined overhead rate annually based on direct labor hours. Okay? So at the beginning of the year, it estimates 31,000 direct labor hours would be required for the period's estimated level of production. Okay? Now, again, a couple of other things to sort of keep in mind here to get this picture, instead of turning this into a math problem, helping you understand what is actually happening in the real world, right? For this whole thing of required for the period's estimated level of production, understand that the sales department has been going out and they've been working on getting sales, and they've been closing sales, and we've been planning out from the sales department, the production department has been planning out when they're going to be able to work these jobs in, so that when we get to this from the accounting side, we know we got a pretty good idea as to how many hours we should have and how we're going to lay this out. All right. So the company also estimated $564,000 of fixed manufacturing overhead costs for the coming period. Okay. So again, if you're having trouble with that one, that whole fixed manufacturing cost is basically maybe the couple of IT folks at the factory, a couple of accounting folks at the factory, the general manager, the assistant general manager, the general manager's secretary, assistant person. You with me? Okay, so that's all that fixed manufacturing overhead. Then we've got variable manufacturing overhead. So again, like that workers' comp insurance that we have to pay on everybody that isn't necessarily factored in immediately when we code timesheets and everything to jobs. All right. So we've got a variable manufacturing overhead of $3 per direct labor hour. We've got Harris's actual manufacturing overhead cost for the year was $717,000. Now stop and think about that one. Actual manufacturing overhead costs for the total year. You with me on that one? The 564 is the fixed. That's the total. So that includes variable and fixed. Okay? So make sure when you see a number, you're like, okay, both fixed and variable in it. All right? And its actual total direct labor was 31,500 hours. So actual direct labor, we estimated it at 31. Our actual was 31.5. Okay? Now, let's take a look at how we look at this problem. All right? So, oh, sweet mercy. Okay, I'm not sure why that keeps doing that. Okay. All right. So what we have to do is we have to calculate the predetermined overhead rate. So again, remember, predetermined overhead rate, that is all of the estimates. Okay? All right, so our estimated fixed manufacturing overhead cost, now this one, I didn't give you any kind of input area on it or anything because some of these are actually fairly short. So how much was the estimated fixed manufacturing overhead? The 564. Good. Okay. All right, the estimated direct labor hours was good, the 31,000, okay. The variable manufacturing overhead rate was $3 per, okay? So then that gives us the 31,000 times the 3. That gives us $93,000 in variable overhead estimates, okay? Which then makes our total the 564 plus, which is the fixed, plus the variable. That gets us 657. Then, again, how much was the estimated direct labor hours? It was the 31,000. So don't mess that one up, right? We're still not to actual yet. We're looking at estimates, okay? Which then means that our predetermined overhead rate is just simply the total overhead divided by number of hours, and we get a predetermined overhead rate of $21.19 per labor hour, okay? So again, notice what's happening. In that last problem, we were talking about machine hours. Now we're talking about direct labor hours. Question? No, because this is overhead. What you're paying the employees is going to be in that direct labor number. So when we have direct labor and direct materials, that's where the employees that are actually touching the product to manufacture it are included. These people who are contributing to the manufacturing process but aren't touching the product. So again, it's all those people in the office, could be some maintenance staff that take care of the plant, just depending on, I'll give you for instance, like my father-in-law was an industrial electrician, worked at a plant facility, so he wasn't a production worker. He worked and kept the machines going, but he did the electrical side. Okay? All right? Any questions on that one? So that's kind of a nice little simple easy one that doesn't have like 52 different pieces to it. All right? Let's take a look at the next one. All right? 2-2. So we've got Luthan Company uses a plant-wide predetermined overhead rate of $23.50 per direct labor hour. This predetermined rate is based on a cost formula that estimated $282,000 of total manufacturing overhead costs for an estimated activity level of 12,000 direct labor hours. Okay? Now again, remember, a $282,000 fixed, variable, or both? Both. Okay? Both. Again, I keep asking you those kinds of questions because, again, I want you to keep rethinking it, and eventually it's just going to become second nature to you, hopefully. Okay? All right. The company incurred actual total manufacturing overhead costs of $267,000. So we ended up with not quite as much overhead and 12,500 of total direct labor hours. So again, we estimated 12,000 direct labor hours, but we ended up with 12,500 actual. Okay? All right. So then, let's take a look at the question. Determine the amount of manufacturing overhead costs that would have been applied to all jobs during the period. Okay. So we're trying to figure out actual applied overhead. So when we're trying to look at actual applied overhead, we look at actual number of hours, which was how much? How many actual hours did we have? How much? The 12,500. Okay. We estimated the 12. We estimated everything based on 12, but we actually had 12.5. All right. The predetermined overhead rate was there we go, $23.50, which means the amount of manufacturing overhead cost applied to the job, or all jobs, was the actual number of hours times that estimated overhead rate, or $293,750. All right? Now, let's stop and think about this one for just 1 second, because again, this is kind of a foreshadowing for a future chapter that I think is actually chapter 3. What was our estimate for total manufacturing overhead dollars? 282. Our actual was 267. We applied 293. You see it? Are we going to end up applying too much overhead or too little in this case? Too much. Okay? We're going to learn how to figure that out. We're going to have to learn how to deal with that in a later chapter. Okay? Because again, there's two pieces to all of this. We've got the estimates that we're starting with, and then we've got the actuals. And when the actuals in that long fundamental problem, we were like the magic genie on that problem. We estimated a certain number of hours. We applied and had actual, the exact same number of hours. So that's the reason why that first fundamental foundational problem, that's the reason why we have the exact same cost of goods sold and the exact same revenue. This one we are not. Okay? Because we estimated one set of numbers, we ended up with actual of a different set. Okay? All right? Any questions on that one? All right? Let's look at exercise 2.3. All right? We've got Mickley Company's plant-wide predetermined overhead rate is $19 per direct labor hour. Again, think based on estimates. And its direct labor wage rate is $14 per hour. The following information pertains to job A500. Right? So this one job, we've got 250 in direct materials. We got 140 in direct labor. And then they're asking you, what is the total manufacturing cost assigned to job A500? Okay? So total manufacturing cost, direct materials, direct labor, and overhead, applied overhead. Okay? So direct materials was how much? The 250. So we can hit the equal sign and grab that number. Direct labor was the 140. Good. Okay. Now, this applied manufacturing is going to be a little bit tricky because they've left out something. They're making you calculate something to apply the overhead. How is overhead applied in this question? By what? What's our driver? Number of direct labor hours. You with me? Did they give you the number of direct labor hours? Did they? They did not. So how do you determine direct labor hours? Good. The total direct labor of that labor, divided by that direct labor rate, okay? So if we grab that direct labor rate, let's see, that direct labor rate was the $14 per hour, which means that the direct labor hours is just simply the total labor divided by that labor rate, which gives us 10 hours, okay? Then our predetermined overhead rate is the 19, which means that how much is the applied overhead? 190. So we just grab that 10 labor hours times that 19. And again, we could hit sum or we could hit pluses, either way. And we get $580 in total manufacturing costs. Okay? Don't miss stuff like that. How many of you on your chapter 1, so, well, I'm going to ask you a question about your chapter 1 homework because there was a little bit of a tricky question in that one. All right? So how much was the total manufacturing cost? So now we need, if job A500 consists of 60 units, what's the unit product cost for this job? So we start with total manufacturing cost. That was the 580. Total number of units was 60. Unit product cost just is the total manufacturing divided by the number of units. Any questions on that one? Okay. All right. Let's go to the next one. All right. So on 2.9, all right, we've got Newhard Company applies overhead costs to jobs on the basis of 111% of direct labor cost. Okay, so again, don't miss this. 111% of direct labor cost. Okay, not per hours. Okay, job 313 includes 1,300 units, and its job cost sheet contains $21,834 in direct materials and $10,600 in direct labor. Okay, now, so in requirement A, it says, what is the total manufacturing cost assigned to the job? All right, well, the direct materials, that was how much? Good, the $21,834. The direct labor was good, the 10.6. And we need the manufacturing overhead total. All right, so the overhead application rate is that 111%. Okay, so to get to manufacturing overhead, we're going to take that 111% times what? Good, the direct labor amount of 10.6. You with me? So again, depending on how we're applying these things, again, so far, our drivers have been machine hours, direct labor hours, and now we're using direct labor cost as our driver. So again, I can hit an equal and a sum. Grab those three cells above. All right, so then we've got the number of units. That was 1,300 from right there in the narrative. And we need a unit cost, so we take what? total job cost divided by number of units, or $34 per unit. How we doing? Let me show you something real quick on this one, just because it's one of those things where it's like I try really hard to make sure that I'm formatting everything correctly so that you have exactly what you need to plug the answers into the Connect. Let's say in this particular question, it wanted the unit price with 2 decimal places, okay? If we right-click on that cell and we click Format Cells, right here I've got decimal places of 0. We just hit the up arrow twice, and now we can see that that's not rounding it from like something like a $33.98 or something to where, you know, something crazy in Connect would mark it wrong. Any questions on that one? Okay. All right. Let's look at exercise 2-7. All right. So on this one, we're looking at job order costing, but now we're applying it to a service company. Okay. So Tech Solutions is a consulting firm that uses job order costing. Its direct materials consist of hardware and software it purchases and installs on behalf of its clients. The firm's direct labor includes salaries of consultants who work at the client's job site, and its overhead consists of costs such as depreciation, utilities, and insurance related to the office headquarters. So, and then it says, as well as the office supplies consumed serving clients. Now understand, this is a little bit like construction. So again, when we're in a consulting kind of environment, the consultants, the headquarters where everybody is when they're not on a job, right, is over here. When they are assigned to a job, they simply come out of the headquarters and they go to the location of where they're implementing this software. Okay? All right, so then it says Tech Solutions computes its predetermined overhead rate annually based on direct labor hours. At the beginning of the year, it estimated 52,500 direct labor hours would be required for the period's estimated level of client service. So yet again, think about what you've got going on there. You've got salespeople out there making sales. You then bring that sale information into the business. You then send it over to the folks who are project managers, and they're like, okay, we're going to need 5 consultants on that job. We're going to be able to have those 5 consultants available during this period to this period. So we're going to start on this date, end on this date, and then we know exactly where everybody's going to be, and it's all planned out. Okay? And then the accountants take that information, and we use these estimates to determine the application rate. Okay? Continuing on, the company also estimated $262,500 of fixed overhead cost for the coming period and variable overhead of 50 cents per direct labor hour. Okay, so think about what's going on there. There's our fixed overhead, and then 50 cents per direct labor hour, and that 50 cents per direct labor hour was based on the 52.5. Okay. The firm's actual overhead cost for the year was $283.3. Okay, now again, stop and think about that one. Don't shift gears. $262 is fixed overhead. The $283.3 is fixed, variable, or both? Both. Okay, that's a real easy one to sort of have the shift gears, and then you're thinking, okay, the 262 was fixed, and then this was fixed. the 283 was fixed. No. 262 was fixed. 283.3 is both. Okay? Actual total direct labor was 57,850 hours. So again, think about what happened there. We made our estimates based on 52.5. We actually had 57,850. Okay? So watch for stuff like that. Again, we're going to learn to deal with that here in just a minute. Or actually next chapter. All right? So then they ask, compute the predetermined overhead rate. All right? So one, we start off with estimates. So when we are computing the predetermined overhead rate, we're dealing with estimates only. So the fixed manufacturing overhead cost was estimate good. The 262,500. The variable overhead rate that they gave you was good, 50 cents. The estimated direct labor hours was good, the 52,500, which then would have given us a calculated number of the 50 cents times the 52,500, right, for our variable piece of the overhead, gives us 26,250. So then total overhead becomes the sum of those two, or the 288. All right. Then our estimated direct labor hours was good, the 52,500, which then means that our allocation rate is simply the total overhead divided by the estimated hours, which gives us $5.50 per hour, direct labor hour. Okay? Again, when you're computing this predetermined overhead rate, we are not magicians. We can't really, everybody wants to act like we do. We can't. We don't have a perfect crystal ball, right? But we do the best guess that we got. Okay? Let's look at part 2. During the year, Tech Solutions started and completed the Xavier Company engagement. The following information was available with respect to this job. Right? So we've got direct materials, we got direct labor, and we got the total direct labor hours worked. All right? So again, when we're trying to come up with the total job cost, we've got direct materials. So try to imagine direct materials in this one, since we're a technology company. The direct materials is going to be, let's say that we're implementing a piece of software. I don't know, maybe a piece of manufacturing software. And the cost of that manufacturing software that we're implementing is $43,500 worth of software. We had to buy that from whoever developed the software. Okay? Then we've got a direct labor. That's the $22,000. And we've got our manufacturing overhead. So how do we get our manufacturing overhead? Good. Okay. So we pick up our 210 hours that were actually worked on the job times the 550 estimated rate. And again, the total job cost is the sum of all three. Direct materials, direct labor, easy peasy. It's this overhead application stuff that just gets a little bit more complicated. All right. Any questions on that one? All right. Let's take a look at exercise 2-4. All right. We got Fickle Company. Has 2 manufacturing departments. We've got assembly and testing and packaging. The predetermined overhead rates in assembly and testing and packaging are $20 per direct labor hour and $16 per direct labor hour. All right. So again, predetermined overhead rates. Let's grab those real quick as we're working through. So the $20 is for the assembly department. So let's plug that into our data. And the 16 was for testing and packaging. Okay. Company's direct labor wage rate is $22 per hour. Okay. So in this particular case, the labor rate does not matter which department you're in. It's the same for both. All right. Now, so item number 1. So that's what we've got so far. Yeah, that's what we've got so far. Now, can we calculate anything else? Good. We can calculate the labor hours by doing what? Good. Direct labor divided by the labor rate. So there's our direct labor divided by the labor rate. 8.5 hours there. And again, I can do a right click on my mouse, copy, right click, paste. So let me just, if you're starting to notice, again, you saw this in 120. On one of those questions where you're sitting there and you're looking at this question and you're just like, I don't have enough information. Go back to what you know and decide, is there anything that I have here that I can use to calculate what I need? Okay. So on the direct materials and labor, again, that one is just coming back up here and grabbing the direct materials, and we can copy that one. Now watch this one. So we can actually grab that, copy down, then I can actually do a right click, and I can do a copy and a paste. All right. Our manufacturing overhead was number of labor hours times the overhead rate. So let's pick up the number of hours times the predetermined overhead rate. That one I can also do a right click, copy, paste. I can then sum all the cost from the assembly department. Depending on how you want to do it, I'm just going to type it in again. I'm going to sum all the cost from testing and packaging. And then I'm going to combine those two numbers together to get all manufacturing cost of $9.49. How we doing? Okay. Then it says, if job N60 consists of 10 units, what's the unit product cost for this job? So the total number of units produced was 10. The unit product cost, just take the total cost divided by total number of units. So none of this is horribly difficult. It's just, again, it's just a lot. Okay. All right, let's look at exercise. Well, last question. Any questions on this one? The only thing that we changed here was instead of having one predetermined overhead rate, we've got two. Okay. All right. Exercise 215. All right. We have White Company has two departments, cutting and finishing. The company uses job order costing and computes a predetermined overhead rate in each department. The cutting department bases its rate on machine hours. The finishing department bases its rate on direct labor hours. So now we've got two departments and two different drivers, okay, rather than two departments and one driver, okay. All right, so then here's the information that they gave us regarding the departments. Some of the direct labor hours, machine hours, total fixed manufacturing cost, and then we were given a variable overhead rate. All right, so estimated, let's see, compute the predetermined overhead rate for each department. Okay, so the estimated fixed manufacturing overhead cost, that's simply the 380. We can copy and paste that formula. Well, I get down to the end of class and then suddenly things just don't want to work. Okay, I give. All right, equals 527. All right, so there's those two there. All right, then we need the estimated variable manufacturing overhead costs. All right, now in the cutting department, we need variable manufacturing overhead cost. That was what? Are we allocating based on machine hours or direct labor hours? Machine hours. So now we've got to pick up machine hours times the machine overhead rate. Over in the finishing department, we're allocating based on direct labor. So we pick up direct labor hours in the finishing department times the overhead rate. Okay, we're just simply going to sum those two together. Oop. We'll copy and paste those over. All right, now, again, we're trying to determine the predetermined overhead rate. So now, in the cutting department, we pick up total cost and divide by machine hours. So again, pick up those machine hours, not the labor hours. Over in the finishing department, we're going to pick up machine or labor hours. Labor. And now we just simply take the total cost divided by the machine hours and total cost divided by direct labor hours. Any questions so far? If you notice, that's the one thing that we start with every single time. We've got to figure out this predetermined overhead rate. Yes. It's not, okay, all right, so for those of you who are online, so the question is, in the cutting department, are the direct labor hours a relevant cost? The answer is yes. Where are those costs when you're talking about the cutting department? They're in direct labor. Okay? So the actual labor, how can I say this? Let's talk about why, because again, why answers a lot of things. So in the cutting department, we're using machine hours. So imagine, let's say that we're cutting sheet metal, okay? The way that sheet metal cutting works is you probably already have like a predetermined little program that you've downloaded into the machine. You slide this big piece of sheet metal onto the machine, and the person walks over and says, start. They walk away, and that sheet metal fabricator cuts out the pattern and everything from the sheet metal that you need. Does that make sense? That machine hours would drive the overhead cost? Because the direct labor hours, I mean, it's like, I don't know, somebody takes 10 minutes to plug in the software to figure out what needs to be cut, and then all they do is slide on that piece of sheet metal and walk away, and maybe hit the start button and walk away. So it would be pretty difficult to determine overhead application based on labor hours in the cutting department. But machine hours are much more applicable because one piece of sheet metal might take 2 hours to cut out everything that it needs. Another time, you slide that sheet metal onto the machine and it takes 5 hours to cut out what you need. You with me? It could be a computer. You could, depending on how your cost sort of functions, let's say that you're in some sort of service industry where you're providing IT consulting services, right? You could probably get away with allocating based on maybe not even necessarily labor hours, but labor days, right? Because every consultant's going to have to be on the job with a laptop every day. And then we might take all the cost of those laptops and allocate it based on how many days is it that job, this job, the next job. Okay? So that would be one option. They do something very similar at my husband's work where their IT department is allocated to all their divisions based on the number of people in each division, because if you got 500 people in Division A, they've got 500 laptops, or if you've got 20 people over in Division B, that's a whole lot less time that IT is going to have to deal with 20 laptops versus 500. So there's all kind, you have to, this is one of those where it's like you kind of just have to get to know the business, the specific business that you're in, to determine, okay, what's really pushing these costs to a job. Because if you mess up the driver, that's the worst thing. Because getting the total cost, that's easy. That comes right out of the general ledger. But screwing up the driver is where these things get a little squirrely. All right. Okay, let's take a look at part 2. The job cost sheet for job 203, which was started and completed during the year, showed the following. All right, so we got direct labor hours, we got machine hours, we got direct materials, and we got direct labor cost. All right, so using the predetermined overhead rates that you computed in requirement 1, compute the total manufacturing cost assigned to job 203. All right, now again, we're going to pick up direct materials and labor. So again, we can come up here and we can pick up the materials. We can copy that down. We pick up the labor. We can copy and paste it to the next column. And there's all of our direct materials and labor. Okay. Over in the cutting department, what's our allocation driver? Machine hours. Okay. So our manufacturing overhead based on machine hours, we're going to pick up our machine hours times our $9.73 that we just calculated. All right. Over in finishing, we're using, what's our driver? Labor. So we pick up our number of labor hours and we multiply that by our rate. Now all we got to do is just do a little summing. So we sum the columns. And we sum those two cells together. All right. So that's our total job cost. All right. Now, in item number 3, it says, would you expect substantially different amounts of overhead costs to be assigned to some jobs if the company used a plant-wide predetermined overhead rate based on direct labor hours rather than using departmental rates? Now, when you stop and look at this, look at the direct labor hours. In the cutting department for this job, and let's say that this was a typical job. In the cutting department, we've only got 6 labor hours versus finishing has got 12. And if this is a typical job, then we're always going to have twice as much, if we used a plant-wide rate, we'd always have twice as much overhead being allocated to finishing based on labor versus cutting. You with me? Okay. But when we look at this, look at the differences there. Cutting, so think about what we just said. The cutting department, if we were using a company-wide rate, cutting would get what? Half of what finishing is going to get on overhead. But look at what we actually calculated based on the departmental application rate. We got 7 times more in cutting than we did in finishing. So if we used a company-wide rate and cutting got 50% and finishing got twice that much, would we see a big difference between them on the application? Yeah, big time. Okay? And I gave you the author's version of their answer. So yes, if some jobs require a large amount of machine time and a small amount of labor time, they would be charged substantially less overhead costs if a plant-wide overhead rate based on direct labor hours were used. So again, you've got the whole thing here is thinking through what the real driver in a specific department or overall in the company actually is.